It's the midweek edition of Business Morning. Welcome and thank you for joining us. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Good morning. We tee off with the global oil market update as oil prices traded higher in the early hours of today, with international benchmark Brent crude futures up 0.5% to $57.75 a barrel. US crude futures gained 0.46% to $55 per barrel. Oil prices hit a one-year high yesterday after climbing by 2%. International oil price benchmark Brent crude touched $58.05 per barrel on Tuesday, its highest level since January last year. This comes after latest data shows that world's top oil producer, Saudi Arabia, and other key members of the producer group, OPEC Plus, are cutting crude output in line with its commitments. Nigeria's budget for the year is pegged at an oil price benchmark of $40 per barrel, with a daily crude production estimate of 1.86 million barrels.
And Nigeria's headline inflation is expected to increase by 0.45% to 16.2% in January, and that's according to latest forecast by financial derivatives company. The Economic Advisory Company also says it expects food inflation to rise to as high as 20.9% within the period. And if the official figures match the projection made by FDC, it will be the 17th consecutive month of rising inflation and the highest level in almost 4 years. Meanwhile, the National Bureau of Statistics is expected to release the official inflation report for the January later this month, while the fourth quarter GDP report is expected to be released on February the 22nd.
Yeah, and maize farmers in the country have kicked against the call for the import of maize by members of the Poultry Association of Nigeria. Addressing newsmen in Abuja, the president of the Maize Growers Association, Bello Abubakar, explains that the maize import will serve as a disincentive to farmers as well as serve as setback to the federal government's drive for a food security plan. The Central Bank of Nigeria, through its Anchor Borrows program, last month announced the release of about 300,000 metric tons of maize into the Nigerian market by February. Let's take a listen.
The federal government of Nigeria, through the CBN, will release 300,000 metric tons of maize grains from the months of February into targeted maize market to ameliorate the adverse effect of maize grains price hike and scarcity in the country. Consequently, it is needless, counterproductivity, and unsustainable to lift ban on maize grains importation. Importation of maize grains into the country at this crucial period will serve as disincentive to maize production. Maize farmers and food chain system in the country, we believe that not agreeing to maize importation will aid not just attaining food scarcity, food security as a nation, but also in creating job opportunities and fostering economic development as well. The action will increase local production, stimulate a rapid economic recovery, increase job opportunities, and safeguard rural livelihoods.
Well, you know, for me, in as much as I agree that, yes, I mean, there's no need importing maize. We have all it takes to actually produce this commodity here in Nigeria. But then what sort of policies are we putting in place to actually make sure that we meet up, you know, with the demand? Even with the 300,000 grains that will be released is still not enough, because the feed millers, we talked about it yesterday, will tell you, look, it's not going to go anywhere. Those poultry farmers, same thing, they will tell you that. So there's a huge demand, you know, for this. So I think it's pertinent that the government brings out. The issue of fertilizer is another thing that could actually help these local farmers. But as soon as...
It's the same challenge all through other commodities as well. We have it, but producing it is still the problem.
And then remember that we're talking about sugar next. Yes, talking about some of these commodities. The Nigerian Sugar Master Plan development developed in 2008 by the National Sugar Development Council estimates that the country's demand for sugar will reach about 1.7 million metric tons by 2020. To be able to satisfy this demand, it says Nigeria will need to establish some 28 sugar factories of varying capacities and bring about 250,000 hectares of land into sugarcane cultivation over the next 10 years. Now, it may interest you to know that sugar production can be effectively used to produce ethanol. Right now, the world is paying attention to climate change crisis, so sugar production can effectively come in handy to bridge the gap for crude oil. So, where is Nigeria in the implementation of the Sugar Master Plan as Nigeria seeks to diversify away from oil? To discuss this and more, Dr. Lateef Busari, Executive Secretary, National Sugar Development Council, joins us next. All right, we're being joined now by Dr. Lateef Busari, Executive Secretary, National Sugar Development Council. Thank you very much, Dr. Busari, for joining us on the show.
Thank you very much for having me.
Good morning. Well, despite a growing health consciousness, sugar production in Nigeria has been identified as a revenue opportunity for the country as the world pay attention to climate change, with ethanol now witnessing growing demand in the transportation system. However, sugar output in Nigeria has remained suboptimal. Why?
Well, thank you very much. It has remained suboptimal because sugar production, it's a process. It takes some time before you can have sugar on your table. In the Sugar Master Plan, we estimated actually if you have the three main things that you require to produce sugar, you have the land, you have the technical expertise, and you have the finance. Today, if you have all the three today, it will take you about 5 years to have sugar on your table. Not to talk of where you don't have anything, you have to start now looking for the land, you have to start looking for where you mobilize the finance, you know. So yes, it has taken us quite a while, but I believe that 7, 8 years down the line, and let me first correct one small point you made. Yes, we started the development of the master plan in 2008. We finished it in 2010. We subjected it to stakeholders' buy-in for the next 2 years. I wasn't approved for implementation by the Federal Executive Council until 2012. So actually, we started the implementation in 2013. And if you go by the 10-year plan that we had, it will be 2023, by which time we expect the plan will run through. Okay. So yes, 7, 8 years down the line, we are not as far as we ought to be, but we believe we have laid a very strong foundation for the takeoff of sugar production. And what do I mean by that? All the 4, old sugar plants owned by government that were privatized now have very serious core, investors. Some of them, one of them has already been, completed, commissioned, and working. 2, but for COVID, should have been commissioned early in 2020. And then you just have one that had run into serious backlog, that's Basiti one, that we just got a co-investor for it after the initial investor died, very unfortunately. We just got an investor for it now late last year. So, and then you have a couple of new projects coming up. And these are private sector led, they are not by government. These are, serious business people that we believe have put in a lot of investment and will definitely ensure that they take their money, they get their money out of, those investments. So yes, we are still in the process, but we are certain now than before that we'll begin to see the impact of the master plan in the next 2-3 years.
Busari, among the challenges hindering sugar production is the issue of land acquisition. Many sugarcane farms have been turned into residential areas, making it difficult for private investors to acquire land. What have you done to address this problem?
Well, it's a work in progress. The Land Use Act, says that the land belongs to state governments. But then, of course, we do know that communities, hold their lands in Africa, very, very, very seriously. So, yeah, we continue to engage with the state government, with the communities, to try to let them understand that what we are trying to do is something that will add value to their land. I mean, the land has been there for ages. At best, you are just doing some bit of farming on it. If you could allow investors to come in, and the kind of investors that we are talking about in sugar are the ones that will develop the entire area, the place in Lafayette now. All the people in Lafayette are so happy that they have allowed BOA to come into that place because now they have even a small airport there. And they are even already hoping that the Muslims among them hoping they can take off for Hajj, from there. So you have hospitals, schools, and all the like, besides the fact that you provide a lot of jobs for your own citizens. So yes, we continue to engage them. Where the problem comes is that original owners of the land, or whoever acquired the land, will have paid compensation. Then their children come in 10, 20 years later and now want to even start claiming compensation, So, but it's not something we can solve, at a go. It's something that as they rear their head. And what have we been doing? We've been having town hall meetings. We've been seeing the state government. We've been seeing, the local chiefs and the owners of the land, engage them continuously. And we have asked the operators themselves to increase their CSR, corporate social responsibility projects that will involve citizens of those areas. And I think by the by, we are beginning to, get them, to understand that we are bringing value and appreciating that. But of course, it's something that you'll continue to engage.
All right, Dr. Busari, many would argue that domestic sugar subsector needs serious attention from the government that goes beyond the formulation of a long-term plan if it is to meet national consumer demand and explore ethanol opportunities. For example, the U.S. deliberately keeps sugar prices high to encourage farmers to repay loans and continue production. How about that? Are there lessons to learn from these countries, particularly Brazil? Brazil is the leading global producer of sugar. So are there lessons to learn from these countries?
We are indeed learning from all of them. In coming up with the master plan, if you look at the document, we are not starting from afresh. We are not just reinventing the wheel. We'll learn from all these other countries that are, global leaders in sugar production. Yes, and even though the same countries will tell you that some of the measures we put in place that we shouldn't. They want to continue to use our places as markets for their own products, where we know, and the government knows, that we derive more, benefits to the country from having our own productive capacity, So, yeah, we learn from them, and we continue to, for instance, all the new plans that are coming up, we have the master plan, advises that they also come along with ethanol segments. If you go to Lafayette, in fact, they have already completed the ethanol plant faster than even the sugar plant. So all of them. So no, because before way back in the 60s, 70s, you'll be surprised. You go to any sugar estate, the ethanol is diluted and used to wet the roads to keep down the dust. Now it's become money spinner. So, if you don't even use it yourself to produce ethanol, I'm talking about the molasses now that comes out. If you don't use it to produce your ethanol, you have buyers queuing up, to get it from you. So yes, so we learn from them, and we have factored all that into the development agenda of the sugar development.
All right, Dr. Busari. So your term as the Executive Secretary of the National Sugar Development Council will be coming to an end this month. What would you say was your greatest achievement, and what were your challenges?
Well, to come up with achievement, I would like to mention maybe 2 or 3 key ones. First is the fact that it was during my time that we even came up with the master plan itself. Like I told you now, we started implementing in 2013. I became Chief Executive in 2012. That, along with the amendment of the Sugar Council law, not only gave us the roadmap, it also gave us the capacity, to walk that road. So I think that because now we had our purpose and we have the equipment, to follow through that process. That's one. Two is that, secondly, is I think the reform of the Sugar Council as an agency that will drive the process. And I want to take that along with, provision of tools that will enable the staff, to be able to do that work. So we digitalize, most of our processes, the accounts, the procurement, the, HRM and all that. And, to get not only, got a new head office so that our people have a conducive environment under which to work to be able to drive this process. And I think the third one will now have to do with our mandate. Like I said, all the old 4 sugar companies, owned by governments have been privatized. They are in, serious hands. They are following through. And but for a couple of some of the challenges that we all know that we've been talking about, by now we should. And by 2022, 2023, I think, we should have about 500, 600,000 tons of sugar. The other is still a far cry from where we are going, but I definitely it's a solid foundation from which, the further development of the sector, can rise. The final one that I may mention is the provision of critical enablers, for the sugar industry to become virile and competitive. I'm talking here of, the National Sugar Institute we just, established that will provide R&D backup, to the sector, as well as capacity, manpower development, technical manpower development for the industry. And then, of course, a part of the institute also has the sugar biofactories that will leverage on, cutting-edge techniques and technology to rapidly multiply cane seeds for our farmers, for our growers, and the like. So I would say these are some of the major impact that or achievements that one was able to, record over the period.
Thank you very much. Thank you very much, Dr. Busari, and congratulations on the successful completion of your tenure. We wish you all the best as you move on. Thank you for your time.
Thank you very much. Thank you very much, Maize. Thank you so much for having me.
You're welcome. All right, from the effect of the outbreak of COVID-19 to the consequences of border closure, manufacturers say they lack confidence in the economy in the whole of 2020 as the manufacturing sector gasped for breath. They just brought out their CEO Confidence Index for the fourth quarter. That's what we will be discussing. The Director General of Manufacturers Association of Nigeria, Mr. Segun Ajayi Kadir, joins us next.
And Mr. Kadir joins us now, Director General of Manufacturers Association of Nigeria. It's a pleasure to have you on the show, Mr. Kadir.
Thank you for having me.
Thank you for joining us. Looking at your latest report, why are manufacturers CEOs losing confidence in the Nigerian economy?
Well, thank you very much again for having me. The outcome of our MCCI indicated that increasingly manufacturers are losing confidence in the economy, and that's because of the several challenges that confront the sector. For instance, in the last quarter, that's the fourth quarter of 2020, we had a situation where the Forex, the Naira continued to depreciate against the dollar. The cost of power kept on rising, and you are aware of the recent increase. There's high cost of transportation, especially at the ports. We have indicated that it costs about the same amount to import a 40-foot container from China to Apapa as it is to take it from Apapa to Agbara, which is just a journey of less than 27 kilometers. And then there's, of course, low demand and sharp reduction in terms of household purchases. We have high cost of raw materials, which is, of course, also a direct effect of the rate of the Naira to the dollar. So there are quite a number of factors that have reduced the confidence that manufacturers in Nigeria have about the economy.
Okay, so tell me, what really is the objective of this index? Why is it important?
Okay, so the objective of this survey is to give a clear indication of how manufacturers who operate in the economy of Nigeria feel about the economy, what they think about the macro environment, and quite importantly, how government policies aimed at improving the economy impact on the sector. So we'll be looking at how the interest rates, the lending rates, inflation, and so on impact the manufacturing business, and how confident they are that government policies are addressing the myriad of challenges that we have. That's the major objective. And we conduct this survey across the geopolitical zone, across the 10 sectors and 74 subsectors of man, and all over the country.
So from your findings, you are asking the federal government to reverse the 50% hike in the VAT. Why, considering that Nigeria's VAT remains the lowest?
Well, yes, it's been severally mentioned that we remain the lowest, especially in Africa and so on. But the policies that we take has to reflect the environment in which we are operating. For instance, now, government is pursuing policies that will make the economy better, that is improving the well-being of the people. So VAT being a consumption tax at this time of suffering a recession, it is best you put more money in people's hands, or you allow them to be able to purchase more than they have been doing. So it is important that you bring down the rate so that people will be able to buy more. Also, manufacturers have indicated that our warehouses are full. The inventory of unsold products is piling to the extent that we now have to invest in warehouses where we keep our finished goods. So I think the special circumstances of Nigeria dictates that you take policies that will help the economy, that will grow the economy, and that will help us to find our way out of the current recession that we are in.
Now, just as you mentioned, access to foreign exchange was one of the major challenges and still remains a major challenge faced by manufacturers. How can this problem be addressed? Your survey, of course, would have proffered some kind of solution for the central bank and other policymakers in addressing this particular issue.
Yes, indeed, we did mention that. And central to our advocacy in this regard is that you cannot treat all sectors of the economy the same way. Manufacturing business will help to reflect the economy. It will also improve our productivity. So what we ask for is for us to have some strategic support for the manufacturing sector in terms of getting forex at the official rate, for instance, and also giving swift approval for usage of foreign exchange to manufacturers so that there will be no unnecessary delay and inability to secure the requisite foreign exchange, which will also fast-track the unification of the FX windows in the country, because this will remove the issue of having to get forex at a very high rate for you to procure your spares and your raw materials, and also in some cases not even being able to get it, and therefore losing your market edge in some cases. So what we advocate for is for a strategic intervention to be able to help the manufacturing sector. We do know the parallel situation of government incomes and the need to conserve foreign exchange and all that, but it will be more useful if you are able to put more forex in the hands of those who use it for productive purposes that will be able to reflect the economy and allow us to quickly get out of the recession. And meanwhile, manufacturers are also involved in sourcing foreign exchange for the country, because the ones that we repatriate from our exports boost the foreign exchange holdings of Nigeria.
Okay, looking at your recommendations, you are recommending that the government should construct a critical generational pricing model for the economy that will recognize changes in inflation, exchange rates, and lending rates in determining wages. Can you expatiate on this?
Okay, yes, I think this is part of our recommendations in order for us to be able to improve purchases. The minimum wage of 30,000 naira, I mean, it's just about 78, close to $80. And that will not be enough for an average Nigerian to be able to meaningfully dispose income in a way that is beneficial to him or her. So what we are saying is that the aggregates of these indicators should be used as a baseline for assessing how much the minimum wage should be, such that we'll be able to have a situation where what you earn is actually impactful on your life. So we are saying that whether or not the minimum wage is high or low should be determined by those other economic factors that obviously influence your capacity to purchase. I mean, that's basically what we mean in that respect.
All right. So you are also calling for the recapitalization of the Bank of Industry and the Bank of Agriculture. Why has that become paramount now?
Yes, we recognize the importance of these two banks. And so we do know also that the demand for credit from these specialized banks are critical to the development of the manufacturing sector. So the more money they have, the more they will be able to lend. And so we feel that government, being a major shareholder, should be able to put in more funds so that more manufacturers will be able to benefit. In spite of the interventions from the CBN and the efforts of the bank to fund the manufacturing sector, there are gaps. Also, apart from the fact that when you go to the commercial banks through which the central bank intervenes, there are so many bureaucratic bottlenecks that has made it practically impossible for manufacturers to get those facilities. So we believe that if we recapitalize these two banks, and with the expertise that they have acquired over a long period of time, we should be able to have more meaningful inflow in form of credit to the manufacturing sector.
So how prepared are the manufacturers to take advantage of the opportunities in the AfCFTA?
Well, that's the big one. I think that manufacturers are actually eager to take advantage of the African Continental Free Trade Agreement. It offers us an opportunity to reach out to the more than 1.2 billion people market. It also gives us opportunity to leverage on value chain to be developed across the border. It also gives us an opportunity to innovate and to compete in an environment that may not be seen to be too difficult when compared to having to export to Europe and the rest. However, our preparation is predicated on what support we are able to get. There are some supply-side constraints that we need to overcome in order for us to be able to beneficially engage in the market. In-house, we have been doing some kind of mentoring. We have been giving advice to our members and organizing webinars and meetings for us to be able to strategically locate the areas of beneficial engagement in the African Continental Free Trade Area. So our members are ready, and we are cooperating with government agencies and structures that have been set up to enhance our capacity to compete. For instance, the National Action Committee on AfCFTA and the National Office for Trade Negotiations. We are in touch with them, and we are holding meetings and strategizing. We are continuing with government to improve our negotiation skills and the things we are putting on the table. So we are generally looking forward with optimism. However, we do know that the level to which we are able to achieve success is contingent on the reforms that government is making to make the economy better, and for us also to be able to have a straight line of communication and consultations with government, so that we are not left out when important decisions are taken, and that when we do have issues as we go along on this continental journey, we are able to have government support to be able to redress them.
All right. Thank you very much, Mr. Kadir, for your time, and I wish you all the best. Be well and be safe.
And we
Thank you
hope
very
they
much.
get. We hope confidence improves.
Let's hope so.
Let's hope
Well,
so.
depends on whichever policy they put to encourage,
Exactly.
I mean, some of those issues that they have raised
Yeah.
here. But let's keep watching and see how it plays out. 2021 has just started, and let's give the government the benefit of the doubt. That's what I think.
Exactly.
All right, let's talk to Edidion now, looking at the markets. Now, Eddie, it seems short-term risk takers seem to have occupied that market. That's not making me happy anyway.
I know you're not happy. Coincidentally, Jimmy, you and I are in similar colors to what the market was like yesterday. You're right. Short-term risk takers came into the market, and we saw profit-taking across board, not just the banking sector, the consumer goods sector, industrial goods sector, oil and gas and insurance were all in the red yesterday. But we'll be talking more about that with Afolabi Benro, a stockbroker at Stanbic IBTC Stockbrokers. Good morning, Afolabi. Thank you for joining us on the program.
Good morning. Thank you for having me.
Afolabi, just like you heard, Chimi is not happy with this red market that we're seeing. So how long is this profit-taking going to continue in the market?
Well, the market rallied a bit last week, and that's why we started to see some profit-taking starting from yesterday. Today, the market has started off on a bit of a quiet note, although the all-share index is down about 9 basis points right now, but it actually still looks like it's going to continue at least for today. The trend that we normally see when this happens is that the market will go up for a bit, and then maybe it will spend like maybe 2 or 3 days going down before the market gets to, or prices get to levels where, you know, investors start to get interested again. Another thing I wanted to point out is that, you know, we're in the period where we're expecting, you know, full year results to come out. And with this, the announcement of potential, you know, dividends to be paid. And that's usually, you know, would be a catalyst for the market. So we'll probably continue to see, you know, investors sort of cherry picking, you know, where prices get to attractive levels in anticipation of upcoming dividends while they take positions, you know, in anticipation of those dividends.
So what's the market like now as we speak? I know trading started some minutes ago. So what's the market like? Are we likely to see the same sentiments today?
Yeah, I mean, it started off on a bit of a quiet note. The all-share index is just down about 9 basis points. You know, so sometimes we have an approach from investors where they sort of wait to see, after a day like yesterday, they wait to see, you know, the direction of the market and just kind of like just hold back and see, you know, before taking any actions. But so far, what we've seen on our end, we're seeing sort of buyers sort of stay back at the lower end of the market, you know, while sellers are still sort of staying at the higher end of the market, and that's why it's a bit quiet.
All right, Afolabi, thank you for your input on the program. Do enjoy the rest of the day. Afolabi Benro is a stockbroker at Stanbic IBTC Stockbrokers. Now, just to look through those numbers, the all-share index was down 0.74% at 42,043.79 points. Now, the equity cap dropped from the 22 trillion naira level to 21 trillion naira level at 21.993 trillion naira. Activity level was lower compared to Tuesday's session. Volume was lower by about 5%. We saw that at 556.02 million units, worth 4.78 billion naira, which was also lower by 1.7%. And all of that was traded in 7,110 deals. All the sectors we track, you know, were negative. The banking sector took the heaviest hit, and we saw declines from all the listed lenders yesterday. All the tier 1 banks, tier 2 banks, and tier 3 listed banks all declined yesterday. Consumer goods was down 0.90%, and that was due to declines from flour mills, from Dangote Sugar, and from Cadbury. Industrial goods was down 0.51%, and that was due to the declines we saw on WAPCO. Huge declines from WAPCO yesterday. Insurance was down 0.26%, while oil and gas was down 0.57%. At the bond market yesterday, this market, you know, sustained its bearish sentiment. It's been on a bearish run. We've seen yields increase on the in that space. Now, yields are currently at about 8%, which is really, really good news for investors, because at some point, yields were as low as 1% in this market. Yesterday, the market was down by 5 basis points. Across the curve, we saw yields decline at the short end of the curve. The mid end expanded while the long end was flat. Now, there were declines in, we saw a price change in the March 2027 bond. Yesterday was at 137.04. The day before, it was at 136.53. The next one yesterday was at 142.47, and then the day before we saw that at 121.98. But to talk more about this market with me is Chioma Udu, a fixed income dealer at GT Bank. Good morning, Chioma. Thank you for joining us on the program.
Good morning. Thank you for having me.
Well, it's midweek trading. You know, what should we be expecting in the market for the rest of the week?
We've seen a bearish bias in the market. We've seen a lot of discounting, especially at the mid to short end of the T-bill curve. As a result of that, we've seen rates change from 3.5% to 6% range in the market. We expect this bearish bias to continue as we expect that the central bank will come in tomorrow for an OMO auction.
Well, you know, speaking about the OMO maturities, there were some maturities in the market yesterday. How was that, and how did that affect trading in the OMO market yesterday?
About 100 billion was repaid in the market yesterday, OMO repayment, and the market hasn't been as liquid as it used to be. The market liquidity is an average of 214 billion. So we've seen a lot of banks trying to discount their assets, especially the short-tenured ones, to try and gain funding. Rates in the money market traded at about 10 to 12% because of the tight liquidity we see in that space. We expect that at the next auction tomorrow, if there is one, the home auction tomorrow, that rates are going to come out higher than the previous auctions because of the bearish sentiments in the market.
All right, Chioma, thank you for your input on the program. Enjoy the rest of your day. Chioma Udu is a fixed income dealer at GT Bank. Well, Chimi, I know that the equities market is not really making you happy now, but maybe you should keep your eyes at the bond market, because yields in that space have been on the rise for a long time, and analysts say that that may continue in the short to mid term.
But then what about the Treasury bill side of it? Because that is where I really have an interest in that. I don't do bonds, I do Treasury bills.
Yields are not impressive in that segment of the market.
That's the problem. They have to do something about that,
I wouldn't ask you to put your eyes there. If not, you will be sad.
Anyway, let's continue to track that market. We'll take a break now. When we come back, we'll check in with Juliana.